Get the aviation with the pioneer of technical analysis in India, only on ET Now.
Hello and welcome to Your Trades the week ahead, and what a news-heavy and volatile week it has been for the market. While today's close, 50.83, that is Friday's close, but that as well has come in with its fair share of choppiness.
Oh yes, indeed. But it's just broadly the quantum of news flow globally as well as locally, more so locally, that kind of kept the people on the edge of the seat. So you wouldn't probably complain because the RBI delivered pretty much in line with expectations. A few companies actually came up with announcements that were pretty much better than what the street estimated, but for maybe an ONGC, which was a bit of disappointment, or a surprising disappointment, so to say. So before we get into our guests and discuss what the Nifty did, just quickly tell you what's there on the show for in today's trade. We talk about the credit policy and what the rate sensitives would do going ahead after the rate hike that has happened. Also the newsmaker of the week, ONGC, the government puts the FPO on hold, a bit of a surprise, but what to do with the stock after the run-up that it has shown post this. The IT pack is in focus because of the kind of movement that we've seen in the dollar-rupee equation, rupee hitting a fresh 2-year low, and what does this do for some of these infotech stocks. And of course a lot of mid-cap movers, the prominent among them being Marico, a first large mid-sized FMCG company cutting the guidance, profit warning, and that had an impact on the space. And focus on next week with the FOMC meet being the biggest drawing point as far as the investor sentiment goes.
Okay, two gentlemen join in to talk more about how the week ahead is likely to pan out and what you should be doing with your individual stock holdings. C.K.Narayan to get in the technical perspective, and Sandeep Bandyopadhyay to talk about the fundamentals. C.K., first let me get you in on this one. It's been a fairly volatile week. Does it seem like the market is going to loiter around in the band that we've seen, 4800 to largely 5100, or does it seem like now that the news flow is out of the way, we could see a breakout from these levels?
Well, I think we have had a nice week. It was a little bit volatile, no doubt about it, but I think the way 4900 held and it actually managed to send the market up higher made it, I think, maybe quite probable for most people to go long and actually try and profit from it. We have hit up to about 5150 levels, so I think the movement has been pretty decent. And I'm a little, maybe a tad disappointed with the weekly close. Had it been much better than this, let's say more closer to 5100 levels, it would have probably set up something much better. So my expectation is that, the market could probably range a bit because we have seen a lot of action. And secondly, and a lot more significantly, we had the implied volatility, on options, which had stayed put at about somewhere around 31 to 33 levels almost all across the week. In fact, all across September, we have had pretty high levels of IVs. Now, the IVs have cooled off pretty significantly today. You're actually down to about 26-27%, which would also indicate that the market has now become a little bit more comfortable, a little bit more complacent. So maybe we'll just churn in the range of about 4900 to 5100, at least for the initial part of the week. Okay,
the key factor of how we might do for the markets would also be because of the kind of movement that we'll see in the rate sensitives. And these assume focus after what the RBI did in the policy. On expected lines, though, 25 basis points, and the tone pretty much remains the same.